Hi guys, how are you today? Hope everyone is doing well. Everyone is good. Let's get on it. Today we're testing German 30. Today we're gonna be on German 30, guys. So today we're gonna be on German 30, guys. We're gonna be seeing what went down. What went down during the. Let's see what's happening. What the market had for us this week. Now we could have probably didn't trade this week, but let's see what we could have and how much what we could have made of it. I was just looking at it. I was just looking at what happened during what's this day on Thursday, right? Looking at what happened on Thursday, guys. Just looking at what happened on Thursday, guys. So let's go on this thing, guys. Let's see. Guys, I have music playing in the background, so it's the new flavor that I got. It's the new flavor that I got. So I got just remove everything and start afresh. Right, start afresh, guys. Start afresh. Let's see what the market had for us this week. So I'm marking my quarter point, right? So as you can see, so this is the 15,000. This is 15,000. 15,000, right? And 15,250, as you can see. 15,000, 15,250. There's another structure on top of this. It's 15,000, 15,250, right? Clean quarter points, our quarter points. That's how we start. That's how we start, guys. That's how we start. Then you can go into our inner structures, guys. All right. All right. All right. Let's see how we go. Let's go, guys. Let's go, guys. Well, guys, it's Monday, right? Instead of going look at Monday, guys. Monday, the market came in the week, guys. So yeah, so the market came in during the week and made some type of movement, right, guys? And as well as going up, and then we now obviously now closed the week like with an increase of like how many pips was this? Someone could have caught this. I'm sure someone caught this trade. It was coming up. So for 250 pips, 250 pips, guys. From here to so yeah, this is like 2.5 if we like caught this trade. Let's see. It's like 2.5, 2.5. This yeah, exactly 2.5, I think. Even there is like not this one, but look at this one. Now I'm cutting the pips, the number of pips that this thing is going by. It's gonna change that. That's the number that is 2.5, 2.5 something. 2.5 exact if you can we counting the exact quarter pips, quarter points. Now, guys, let's go on to our Monday, which is this week. Let's look at what happened on what occurred during this week, guys. Look at what occurred during this week, guys. Now, our inner structures, as I was saying, let's mark our inner structures. Now, inner structures is for Monday, right? As we're existing looking at Monday and what was going on during this day, right, guys? Look at what was going on during this day, guys. As you can see, guys, that is one candle dropping. The New York market session open. It's like this candle like dropping to this area, right? What's gonna be our only trade because now it's but then this was a very short trade, so now I'm thinking this trade was gonna be proper, right? So now as the market drops, comes down, dropping, right? Drops, it drops. It drops, comes dropping, right? And now we're going into Tuesday now. But then there's no structure here, right? So you don't make if there's no structure, then there's no. But now if you could have taken the short entry, right? You could have taken only this entry for this day because now it came now. The market it rejected on the structure. Came now, it rejected on the structure now, and then it came now down, dropping now. That's it. But then usually you don't take this type of entries. No. For those people who have big size right now. Let's look at the intro out it, but then it's short trade. Just look at how the let's look at how the market was coming, how the entry came in, right, guys. Let's look at how the entry came in, guys. Now, guys, as you can see, guys, I'm gonna just drop like this. So now entering now here now, or resulted in you now. In the stop loss hit. This is gonna be a stop loss hit, right, guys? It's gonna result in a stop loss hit, and the stop was gonna be hit for this trade. Stop was gonna be hit for this trade. Oh, sorry. So the stop was gonna because now we're gonna be waiting for the structure, and then as I'm saying, in this type of trades, don't take your trade because now this is I think this is a but this is small pips. So now don't take this type of or percentage if I may say 0.12. I'll show you in other trades which shows like it's more bigger like it has like bigger returns. Because now this trade was gonna be like 0.12%, and that's very small, and gonna be risking this trade. We're gonna be risking how much? So guys, and usually you don't trade on Mondays, but we're just looking at what occurred on Monday, right? And how the market was going on. But then it was going to result in a loss. That's the reason why you don't actually trade on a Monday, right, guys? That's the reason why you change the time frame. There we go. Now guys, let's go on to let's see what had occurred. Now this was Monday. So Monday closed down on us. Like, it wasn't a day to trade actually. Alright guys, it wasn't a day to trade. It wasn't a day to trade. So as you can see now, the market was coming dropping down, but I'm expecting the market to drop down to this point. For some reason, it decided to reject and go up for me. This pattern now, because now we're on 1 hour now. When I take it's gonna be scalping now on 1 hour, right? Because now it's the first week of a month, so now we're gonna be scalping now during that time now, guys. So yeah, let's just see what occurred on Tuesday. So on Tuesday now, coming Tuesday, Let's come with fresh market, right? Clean charts, clean our charts, because now it's a different day. So now clean charts. So now let's look at hopefully that you can see the time here. You can see the time now. No, because now we backtest. This is how we backtest, guys. Don't be confused by any chance. So now we come into Tuesday. The market is dropping, right? So now you don't trade maybe during the night, unless if you don't trade during the night, guys. You only trade me after 10 for German30, 10 and throughout the afternoon. That's the time to trade German30 through the New York session. Throughout the New York session, that's the time to trade German30, right? You'll see most trades. You usually find trades around that time. So now the market comes dropping, guys, and drops down to this area, right? And then it forms a pattern. This is what we look for when you trade. It comes down, it makes for us our structure. So okay, this is the structure that it left, right? Okay, we're marking that structure because now it's early in the morning, around 7 and 8, 9. Be like on your market, like mark your structures. That's the first structure the market makes for us, right? So expecting some type of some type of a reaction or something that's gonna help us like to enter the trade, like to analyze it, right? Structure, that's our inner structures, that's our major structures, and this our inner structures, right? Our inner, you just mark it there and leave like that. So now the market comes, now we mark the structure, the market comes down around about 10, and then it makes a structure for us. Then we mark that structure, okay? We mark the structure, leave it like that. The market here it's fumbling, it's ranging, right? On those time frames you can see like it's only ranging here. You make some type of a rectangle right here. Of a wedge, is a wedge actually, not rectangle as such. A wedge actually. Making a wedge on the lower time frames. And then as it comes, it bounces off. And then you find the structure like this. Alright, guys, find the structure, it bounces off and makes us an engulf. That's the time to enter after this rejection of the structure, of a structure, right? And it opens up at 3 o'clock. That's the time to trade this trade. And let's see how did it come about on the lower time frames. Right. There's another structure, guys, also. But instead of looking at the structure, let's see how did it do for us. Let's see how did it do for us. The same mistakes. Give me, guys, sorry about that. It's yeah, it's just one. Let's go to this. Okay, let's go back to H1, right? Go back to H1. Let's H1. I'm sure the easiest way and quickest way to get to that to the trade that we're supposed to be looking at, right, guys? November 23 the time. Okay, let's go to it. Okay, there it shows you still on the 1 hour, right? I'm just zoom in for you to see that you know didn't change a lot of stuff. So in the same time frame, guys, then you go onto your 1 minute time frame. Let's see how it does it do for us. And we go to the same. Looking at the entries for 1 hour, you on 1 minute. I'll show you the reason why am I saying that. So as you can see, guys, we're on now 1 minute. Our entries. Right, this is for our entries. As the market there's an opening of that candlestick, right, guys? When you're opening on an not on an engulfing, right, but then just opening on a shooting star, right, which then you don't enter. But this vertical line, this is the purpose of using the vertical. We have a left structure on our side, right? And then that means you have to mark this left structure, like because now the market came down, impulsing down. The market did go up, okay. We might have for some reason the market can just decide to make this type of formation and then continue going up to our take profit, right? But then for this instance, it decided to okay make this structure for us, which then this is our type of entries, guys. But then looking at this type of look at this left structure, it made the market to come down, which usually mark also the structure, right? Usually also mark the structure, right? Because now is the reason that's the reason why it came down. but then it also form this type of formation, right? Now the structure also market, keep it marked, because now if it results in a loss here, if you didn't trade, if you decided maybe to be aggressive and say, uh let's trade this, and then it went up, then came down to our stop loss, we have been immediately we expect to reject from the structure, and the structure, then we recover what we lost here. So now we're gonna recover like this small loss percentage that we lost by just a one candle, as you can see, guys. So yeah, so this is our entry. This is our entry level. This is on the structure. This is the market came zero to come back to the structure, guys. But okay, yeah. As you can see, that is our first TP, and that's 0.30% of our German30. Look at it from a percentage perspective, guys. Look at it from a percentage perspective. That last trade was on 10, was on 12%. So don't take trades that are less than 15%. Don't take trades that are less than 15%. We only take trades that are this is the percentage that I'm talking about, guys. We only take trades that are more than what we're risking here. We're risking 0.02 to profit at 0.30%. Look at it from a percentage perspective. That's going to benefit us in a long run, guys. So also the structure. Look at it at the structure. But we're gonna lose a 0.3 percentage, right? That's our the percentage that we're gonna lose, 0.3. What's gonna be our percentage that we were losing, right? And then recover that by making this profit of 0.30, right? 0.03 was gonna be our what we lost here. So now this is what we call risk management strategy, guys. That's our risk management strategy, right, guys? Hope you got that trade properly. It's scalping. This is what we call scalping, guys. Like it's what we call scalping. It's like, so this is a scalping week. So a first week a first week of a month, we call it a scalping week. Scalping week. Then the other weeks we refer to them as I was saying, like so when you take like those short trades, small trades, call them a scalping. Because now we're scalping. And then the other one, I forgot the term. I cannot remember. I remember that term. Call it, but remember the term. I'm sorry, that's the term. Let's just jump on what is happening here currently. As you can see on Tuesday, this is a Tuesday day, right? It's Tuesday. This is our day on Tuesday. Right? I'm seeing the structure. Red bounce, right? It also broke like this. Okay, but no. Because profit hit on the structure. It's our first structure. Because now always looking at the first structure, right, guys? And then the market makes a close above again, right? That's another reason for entry. So now looking at our second entry for Tuesday, right, guys? Looking at our second entry for Tuesday. Like, okay, let me not remove that. Uh, 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 not remove that, that vertical line that I put there. Because let's go on to our second entry, right? Okay, this is our reason of entry because now it made it close above here. So now usually the reason why we're entering this trade, because now it came with this double bottom, right? It then made a trade for us. Then we caught that trade, caught that buy, which then was 0.30% that we won the profit, but missed a close above again. and then goes to this structure, guys. Right? The market, the reason why it rejected now, because this is how the market usually moves. It goes down, right? Goes up to hit structures that it didn't that which we usually not or touched, right? And then it comes down. It makes it double bottom, right? In the 4 hours, there's less canyon of the 4 hour, right? And it goes up, but then we're scalping, so now that's why we on each one. Because now, and then this structure, we call it, you just put the structure here, because now the market is always, but then not always rejecting. But then because of this main touches, that's the reason why it rejected. Right, it's a rejection structure. That's a rejection structure. That's what's gonna be our reason for taking that take profit, not on the structure, but then on this because now there's multiple touches on the structure. That's it. Yeah, and then let's go on to our entry. While on our entry point, go on to our entry point, guys. I'm seeing a structure, but then I don't know why we're ignoring the structure. Let's go on to our 1 minute strategy. Then I'm just I'm not taking the structure because now I'm just not taking the structure this year. I'm choosing to take that structure. So maybe the reason for where we're taking our TP, right, guys, opening it because now it's not what type of structure. This type of structure that we want for like to take profit. This type of structures. This structure it has like too many weeks. So that's the reason why I'm not taking this to take profit. That's the reason why I'm not taking that. Making that this is the type of structures that will make our TPs, right? Type of structures. Because now this type of structure you can see it's messy, guys. It's messy, it's messy. So now it's not a structure that we should be taking profit from. And then we have this structure, another structure. The reason why we're not making our take profit there is because now of this multiple structures and this ranging time here, ranging candles here. So let's go on to our 1 minute time frame. Let's see what's happening. Our entry point and our entry level. Our second, which is our second trade for the day. Second trade for the day. Second, that's our second trade for the day. Right, our first trade was around about here on the structures, right, guys? That's where our first trade was. Let's just mark it. I don't know why it disappeared. I don't know why it disappeared. But let's just mark it and show that it's out. Let's open it. What is this? 20% now. Problems, not a problem. Our risk was for this trade, our risk was 0.2%, 0.02%, 0.30. So now looking at our second trade, guys, looking at our second trade for that for this day. First, okay, we start off. That's how our trading, our entry system works, guys. Right. As you can see, the impulse and the way up here to this take profit and rejected, as we were seeing, rejected and came down. But then this is on 1 minute, and as we're coming down, guys, we made an we opened. Usually trade like this, we usually enter, but then came and hit our stop loss, right, guys? But then you can see like from this, you can see from the type of entry that would from the previous entry, maybe we would have expected it to make the same type of entry and not enter that first entry, right? And then as it came down, guys, it came down and hit our yeah, guys, entry it's here because now on the left side, on the previous structures on the left side, the market comes down to touch those type of structure. You can see that there's a similar trade to this first one as it came down to the type of structure, and then our second trade had the same type of entry. So now we mark it and see how many pips was it and how much we were going to be risking on that trade. So now this is going to be even higher. It's going to be 0.36 on this entry, and then now our risk is going to be 0.4. Let's put it on the wick, guys, because now this it helps to put like the stop loss on the wick, like guys, but then because it rejects it. As you can see, guys, it rejects it properly on our structures, guys. So yeah, that's it. Go on the H1 time frame, guys. Okay, something is happening. Okay, guys, let's see. I think that's gonna be that was gonna be our trades for the day. It was, and then the market came down impulsively. Okay, as it rejected there, guys, it was coming down now. Let's see now. Wait, then you can obviously see that it was already a stop loss hit, right? And the New York session was already off at that time. And the London session was already off at that time because now we're going into the Sydney session. No, is it no, not the Sydney session, but an Asian session. But then now the Asian session, it doesn't link, it's not linked to the German30. So now that's why maybe this type of things happen in the market. So now there isn't, but then the reason of entry was there because now because of this rejection, but then it was going to result in a stop loss here. We're going to result in stop loss here. So trading now after that, those sessions, it's not a good thing though, right? It's not preferred like straight after the session, even though the market can come like dropping as it drops or making the type of drops it does, right, guys? Cannot trade like a three. We don't trade a three, right, guys? And if you're an early bird, then you can go on the entry, right? Because now yes, I'm seeing something here, but then I'm not gonna look at it since it's at three, because now we stick to our rules, guys, and stick to what we can do, guys. Stick to our rules, stick to our rules, guys. That's the most important thing. Sticking to your rules now. Discipline, guys. And if you discipline, then life is yours, guys. Discipline. If you like discipline, see, you're gonna see flames, guys. It's not nice. So let's go on to our let's look at now. Looking at Wednesday. Why am I slow on this video? Now looking at Wednesday, guys. Wednesday, what's happening on Wednesday? Fresh market, clean our charts. Then we look at Wednesday, guys. So this is how you wake up, because now there's movement that happen, and there's movement that can end. This movement that can happen, right? And that movement can affect and how you trade now the next day, guys. Right? Which is not similar to the day before. Let's see, guys. You can see like Wednesday was had beautiful moves for us, just striking down. So I'm sure that there's more trades to read to to this day on a Wednesday, because guys, you can see like on a Wednesday, Tuesday and a Wednesday, like during the week, it's a beautiful, like it has beautiful trades, right, guys? Beautiful clean trades, actually, not beautiful as such. But then on a Monday, it's not coming right, as for our system, as per our system. So now, guys, it's a Tuesday morning, right? Looking at the market, seeing what's happening, right? The no mark out your structures. As you mark our structures, this is our first structure on the left side, right? At the market, you can see like the market came and rejected off this area, mirror engulfing for us in a shooting star, right, guys? And it's a session opened, but it came before the session. Usually, the London session usually comes and does some treatment throughout the day, but then specifically from 12 in the from 11 to until 6 8, that's the time to trade this pair. As you can see, our previous entry was around 3, which then was in the afternoon, which then in the New York session. But then looking at this trade, guys, let's go on to the 1 minute chart. Right, this is our first trade. Let's mark all our structures. We have this first structure. So our second structure is as it is high, right? Which I think that's the reason why it went high, because now there was no structures. We can't make this a structure. It's not a proper structure. This is a structure, and this is not a structure. This is a range actually. Because on the 15 minute, you can see like this many candles like forming a range. It's a type of range. A range is just a range is I can say a range, but in a range is this type of market structure, right? And this is just a structure for us. This is our inner structures, right? Let's see the entry on this. Let's see the entry guys on this. Let's see the entry on this. We'll go on onto our 1 minute time frame, and then we see what's happening on this 1 minute time frame. On our 1 minute time frame. See what is happening on our 1 minute time frame. Right guys. Let's see what's happening on our 1 minute time frame, guys. Okay, let's go. Let's go. How we enter this type of entries. Go on to Wednesday. Go and see what's happening. Wednesday, what time? At 10 o'clock, right? It's the time that the entry is gonna come up. At open up the check. Go down to our 1 minute. Just need to press one. Go on to our entry time zone. And as you go on, so our entry opens up with this type of entry system. So now you see, guys, what I was talking to you about. As you can, if you can check what if you can rewind and see the things are the type of entries that we're looking at. It's different to what we're looking at right now. Two different type of trades, guys. So two different type of trades, guys. Now, when you look at this type of entry now, you don't have too many like lower structures, right? Only have structures coming from the upside, which then you don't have to mark the structures. Unless if you can mark the structures as your, but then you don't usually go for the first entry, right guys? But then as you can see head and shoulders here, for those you can it's a re-entry, not a first structure like entry. Like usually go for first structure entries, but then for this one it just that opened up with the head and shoulders, right guys? But then we could have entered also here on this structure and then put our stop loss there, right? One of our lower structures is different from what we suppose, like what we, if you rewind what we were looking at first on the Tuesday. Now for this type of entry, you can see it came down. Now you can see the reason why I'm saying like we're supposed to enter here, because the market was gonna shoot up and then come down to your stop loss. As you can see, your stop loss is gonna be hit here. So now entering the first entries, the first entries, that's always a win. As the market opens, just look for entries and leave the market. Because now if you wait now and wait for lower structures to open for every entry, it's gonna be a problem, because now the market can come back and hit you out and take you out, and then you can see because then it's not to enter wait for formation that we don't. But then you can see for all traders know that what's the head and shoulders. This is our head and shoulder, right? Many people have entered here, but then the market came down and took them out. People put the stop losses, right? But for us, this is a market open structure. Market no can just stick open structure, which then that's our reason to enter this entry. Because I open on an engulfing, open and candle on an engulfing, which then means it's an impulsive. For the reason that that happens because of the session, it's a London session, so now the market is more active. That means it's waiting to impulse to the upside. That's our reason for entry, right? Because plus it's a Tuesday. No, it's a Wednesday, so the market during that time is it's hyperly active. So now that's why it results in us getting this type of entry. And now this percentage is a high percentage from what we got yesterday. So now as you can see, because you can see the pattern here, the market like built up, right? Market builds up, and the market builds up. So now we see the showing like this view, showing the profit, not a loss. Putting it properly, putting it properly for you guys. At the time, but you can see guys the stop loss percentage, how small it is. So, it's like you can see what I'm trying to do here. So it's not more, or is it floating me like this? Okay, I had it properly before. Okay. But then stop, you can see I don't see. Maybe there's oh, okay, I'm seeing the result. But the market opened up with this shut up. Sorry, guys. Sorry about that, guys. So usually happens usually for me. So okay, let's put the thing. Profit to loss at all. The market, okay. The market opened up like this. Because now this is 1 minute now. The market shut down, right? On the one candle, but then up, came up now. It's scary you, right? Because it's scary. Right? When it shoots up, then don't give up. No, wait and see what happens. Usually, it usually happens, and then as it comes, we enter. We're supposed to, but entering there was too far. So enter around where here. So as it shoots up, then it start being scared. Like no, relax, right? Then it comes up and it comes up. That usually happens with 1 minute. Don't wait for the candle maybe to close, right? But if you're looking at it, just buy and go to having a stop loss put there. Because the market plays out as it's supposed to play out, right? If the market plays out as it's supposed to play out, then you can put your stop loss below this candle, which is then 0.4 still, and then that was still our percentage. Let's see if we could have entered there. And then you see now I'm changing stuff now, it's then not making it look it's gonna be like 0.14, which then that's not our type of trades. Now entering here is gonna help us. It's shut down. Just ends we could have entered, then it goes down and then it comes up now. This is just maybe a stop hands. This is what you call stop hand, but then let it not scare you. Just let it come down and then you enter there. And you keep going there with your trades. You find okay, right, to relax. Usually happens so you get used to it. Don't be scared, and then there's an entry there. As was gonna be our first entry to come on this entry right back. But as if I hope we can see guys because now it's a different type of entry. Let's go on. I'm only gonna finish on Thursday, right guys? I'm gonna finish and go on H1 now. Let's go on H1 now, guys, and see what's happening in H1. Okay, let's look at this close up, right? Okay, this is our TP. Then the market came then with the proper close above for us. Above. This is scalping, guys. This is scalping, guys. Scalping. Yeah. 0.63. That was our percentage that we're gonna be on. And now we go for our second entry now. There is enough for this entry that like because now the market came up, make it a double bottom here, which then showing that the market is impulsively gonna go up now because now the double bottom is a strong type of formation or pattern. All right. Now the formation, strong type of formation that which then it allows the market to impulse to the upside, which this is a close above, which is our second entry. Let's see what is happening in our 1 minute time frame. Same type of entry now. Looking at the one and our second entry now. You can see guys how the market is opening, which is then different from what was happening yesterday, guys. Different from what was happening on Tuesday, right? The day before. Different type of entries, right? This is our different type of entries, right? But then on this one, we had our left structure, right? So now it means like just leave room for second type of entries, right, guys? You can see, guys, as I explained previously, like on that other trade, right, guys, like with the 2K. But because the reason now we could have entered because now the market opened up with an engulfing, which then during the New York session, and that's why the market is only impulsing, opening up like this. It's not coming down to retest this previous structures, like this structure, or also this one, right? It came down, okay, to retest because now on this type of int, but then usually, and this is a type of entry that you should be catching at first as before it moves up in that form and in that manner. Right, that's our second entry. Now moving fast now, okay. So our second entry for it below is 0.5. That's our loss percentage, and our second percentage is 0.39. 0.39, guys. And let's go back to our age to 1 hour. Look at what is happening, guys. It's in the same. Oh, one thing I forgot to mention, guys, on this entry now. Okay, we skip now as as the structure now. Right, usually you mark the structure, then you put it as our TP. But then because of this double bottom now, it's showing now an impulsive move, right, to the upside now. Because now this of this double bottom and what it created as it's creating this formation now. So now expecting it to impulse and break all the structures and go to our TP area. Right, guys. Let's look at it even made it close above, right? So now if you go there take but no, this is small trade, you don't take this type of trade. If it is less than 15, right, guys, because now this is very close, right? Next basically to break this structure go to that structure now. So now it's just like that now. Then you go down to 6. The market shoots up, right? But then our tip is already made there because now this is a quarter point, our major structure, a major quarter point, then the market come down to this down structures. Right, guys, and then it sits here. So now wait now for, I think this is time. What time? It was 8. Right, guys, it might come down shooting up now. this type of formation and structures. Let's see. So this small pips. Because I think we should be trading only trades that are more than 30 pips. Trades that are less than 30 pips. Not right. So because I think we can close it within I think my 1 hour time. Yeah. Let's close it, guys. Let's close it. But I'm seeing the second entry, second trade here, right? I'm seeing this drop here as well. It's too small. So trade, even trade. This drop is too small. But I'm looking at what we can do here. I don't know. Let's finish up Wednesday, guys. Let's finish up Wednesday and see what's happening on Wednesday. That's what's happening for on Wednesday. This previous entry, no, what's happening on this previous entry, guys? Came there. Then we stop the loss. It was gonna be a loss for this short entry. But then to the right structure because now, okay. I'll also show you like the other side of things, right, guys? Show the other side. Let me show you. I'm closing it on Wednesday because now I'm going because okay. I might do a part two of it. Let's go to 1 hour, right, guys? And explain to you why you could have taken that trade. But I think it results in us making a loss, right? So now the market impulse, and I think could have been done trading with these two trades. The market came down impulse, right, guys? Like, you must have a ticket for the day, and like much more like okay now. Because now taking out this third entry now, so the downside now, it was gonna be, it's not gonna be a good thing for us. No, let's go for entries. Every entry that we take it back. Alright. We're gonna take much, but then this was gonna result in a loss for us, right? And then because now the market comes now, because we're gonna be looking at okay, can come down and reject on structures, which then made what we were expecting, but then taking this entry could have resulted in a loss for us, right? Because now it came down, shooting down, meaning that it wants to like come and reject from the structures. And as it from this structure coming for rejection, so because now that's how the market moves, come and resets the structure and then it impulse again. So now using now our strategy now, the market comes down, makes an engulfing for us. Then now moving to the upside now, right? Let's see that what is happening on that 1 minute. So what that entry had for us now. The reason I showed you the reason of entry. And it's a proper setup actually, but then came around about late in the night. So our previous entry, sorry guys for doing this. I should have done the one on that side. As you can see now, trading now at this time now. It's different from because now this is another session, but then it made it a proper setup for us guys. So now as we're looking at this night trade, you can see that it opened up in engulfing, which is then the reason of entry. And for the reason, the other reason, because nowadays it had our left structure now, which means we could have marked it right. You can see this left side came with a rejection, which is then showing like an impulse to the upside, right, guys? Which is then, as I was saying earlier before, that there's our type of entries, right? Which then the one on Tuesday, the one that we looked at Tuesday, it showed us like it came down to research to research the other structures, but then this one it just opened up with the same type of formation as as the candlestick as the vertical line was open. But then don't forget that the other one was this on this side, right? But then this for this one is opening up with an engulf. So this when the market opens with the engulfing, like it usually it goes to it's a valid trade, right? It doesn't go to our stop loss, right? It doesn't go to our stop loss, guys. Now the reason now for us now considering now this trade now as I showed now on one because now it came with the rejection, guys. So now let's go on to our let's go on to show you guys some the pips that we have we had, right? So it's gonna be our 0.30 pips now. But then now and then our stop loss was gonna be here. 0.3%. That's our loss percentage. And it's gonna be long. Trades that you take it after 9, they go for very long time. I'm putting the stop loss under the weight now. It helps with this, guys. Now, not trading during the session. You see, can you notice the difference, guys, when you take the trade after the session, after the New York session? Like you take the trades tend to be more longer, right? During the scalping week, guys. This was gonna be 0.30. But then we show another thing, guys. We could have made more pips to the structure here, right? Which then you're gonna counter. You're gonna come back to this one and counter again, right? Let's go into our because now it's past our New York session. So now the market can it's resulting in more in way longer entries for us. Way not way long, but then we're swinging now. It's resulting in us taking swing trades. This is the structure now that I'm talking about. Now the market came down, right? The market as the market goes up and then it comes down to retest now. It made him impulsive retest. The market has to impulse again. Correction, impulse, right? Guys, right. So now the market, that's how you expecting it to impulse and break this structure. And I came with a rejection and then break the structure. Now this was gonna be the reason for putting this TP and not making this a TP. But in the previous trade, we make this our TP because now it didn't like come from any rejection or just I had this impulsive to the upside. But then for this one, it is different because now we had a correction, right? Correction, perfect. Perfect. This is a perfect setup. Then that's our reason of making this structure our TP area. Just put the TP structure and have our TP structure there. And then let's see how many pips would have made after that. It's 55, 0.655% increase if we were to put our second TP there. That's what is what you call our first TP and second TP. Right, but no, but then that's our TP now. I'll show you the reason why we're entering that trade, guys. I think that's where we're gonna be closing it, guys. Any question can put question down on the comment box, right? Down on the comment box, guys. That's our reason now. Now we're ending it now. I'm still in that motion. I'm still now saying that that's the reason why we're taking that. You can put down the question now on the section below, guys. Now I taught on the previous video. I taught you on trading sessions, which are important now because now you can see now. Please go back to that videos, watch the previous videos, and then watch this one. again and again and again. Like, comment, and subscribe and share, guys. Peace out.